The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. 11 o'clock till noon each market day, Monday through Friday. And the Dow made its record yesterday, an all-time high. S&P the day before. I'm thinking we're going to have a little day of rest or two until maybe Thursday afternoon, maybe Friday. Options expiration balance. But most importantly, I don't see any reason why this market shouldn't go even higher until next week. And then we'll get our leg D maybe in the down the S&P. We'll see what happens. Meantime, back at the range, let me just get rid of this right here. Put it into a form that's a little bit readable right there. Okay, the Dow's up Dow's down 3 at 18,345. S&P is down a fraction at 2151. The comp index is at 5,022. Gold is up 5 at 1340. I think it's still consolidating. Silver is up 13 cents at 2031. Platinum is up. High-grade copper is in the 22.3 area. And you've got crude oil down 45.17. Let's just have a look at this little chart over here. This is the one with a 5-minute SPY. Whoa, look at that. The crude oil has plunged, on the 5-minute, of course. It's plunged down to, opens at 11.07, has a high of 11.15, is now at 10.76. Trading right now is at 10.76. Yes. Now, what's really interesting about this is that you've got the SPY holding very nicely, pops up at the very open, and then it pulls back. So a couple of things are going on here. Within the context of, and this should in fact help to drag the market down a little bit just for a day or two. Within the context of what we're looking at, here's the E-mini continuous contract. It's trading at 21.45. It's down 50 cents. And what you've got here is leg B with the MACD, the moving average convergence divergence, very strong, stochastic up at 94%. That is really strong. I'm expecting just a small pullback, and I'll explain why. Within this leg D in the weekly chart, what you can see is that there's a trend line resistance. And my thinking is that it's going to bump up against this trend line resistance. And that even though I'm anticipating a leg C and a leg D in both the daily chart of the Dow and the S&P. Most importantly, what I really think is going to happen is that the first opportunity for the market to have some kind of a digestive moment will be when we go into the Republican convention on starting next week. So what we're looking at here is in the 120-minute chart. Let me just make this a little bit bigger. I had a really good question. I'm going to deal with it right now because I'm liable to forget. Let me see. This is the 120-minute chart. And I've shown subscribers this morning that there's a G/C and that there's a chance we could just pop a little bit above that high of 21.49.25, and then we could be looking at some kind of a pullback. So here's the question. I need to go to the 30-minute chart. I hope I've got it already. Oh, let me just show you. This is the monthly chart. The monthly chart has this. I believe this is a brand new leg B. Yes, there could be an alternate count A, B, C, and this is a leg D. There's just too many coincidences with all the charts that I'm looking at that suggest they've all broken out into brand new buy modes in the monthly chart. So now if I can find it, and give me 1 second here, I'm going to go to this, my window with my little library. More windows, windows. We're looking for something that says 30 minutes. Please. 30 minutes. There it is. Yes, yeah. This is the question, and I hope I can do it on this particular chart, but it's worth doing because, okay. The question is, Chris wanted to know, She said it gets a little confused. When a trend is in place, it's fine. But when you've got this kind of consolidation, it's like a rectangle formation or a cup formation, and you're really going sideways, and you've gone from this side here, let's just call this a leg D for the moment, and then it makes a peak D, and it's at 21.49 on the E-mini. The question was, what happens when it comes all the way back to the same level, 21.48.75, and then 21.49? What do you count it? That's a really good question. And let me show you what I would do. Now, of course, what's going to happen is in this particular one, let's call this, for the argument's sake, I'm just going to put a D here, and I'm going to put a down arrow. I think it actually worked out that way, but just this is for argument's sake, right? For demonstration purposes. Then what I usually do is I put a plus sign here, and I say, okay, I think there's going to be a rally, and the rally is going to be in a rectangle formation, and there could be a left side, right side price time match. And I take my, I'm able to do this with my tools at TradeStation, to the left side, to the low bar that I think is a low bar of consequence. And then I do an equal measured move to the right, call this green, because I'm going to the right. I put it in there, and it says, right about here, I should be testing that exact high. So here I am, I'm counting, and I go peak. This is a peak A. Let me just double check. 44, 44, 44. Now that's A, that's B. Oh, this works out perfectly. So now we go, this is A. This one here is B. This one, all the time I'm going gray A, gray B. I'm not going to have time right now to do that. Gray C. Now what often happens is it goes to C, and it just sneaks above the left side. That's what I do immediately when I immediately take the old letter D, and I say, good, this could be an E, and I put in slash. This is, I'm just pretend now that you've gone to a higher, slightly higher high, and I call it E/C. And very often you don't go to the ultimate thing, which is a D, which is perfect, what we always want. That makes it just so much easier, because now I can just go like this and put in a down arrow, and it's pulled back sharply. So the question is, what do I call this? Well, it's really simple. If this high was 21.49, and this high right here at E/C is, well, it hasn't gone to E yet, but it's C, gray C. If that is 21.49, it's only unless it goes a quarter point, in this case, because the futures, or a penny if it was the index, higher than that, can I give it a new letter? In other words, that's when I can go E/C. So let me just kind of sum it up very quickly. I've gone to a high. It pulls back. It looks like it's making a cup formation. I'm able to give it a left side, right side price time match. The time match comes out exactly within a bar or so, or even to the exact bar, and it stops dead at the previous high. It doesn't break it by 1 penny. In the Chapman wave methodology, the letter stays the same until it breaks above the previous high by 1 penny or more. Is that clear? So that was the answer. Chris, I hope I answered the question. I did it in a very thorough way, but I also just wanted to sum it up to say the answer is a new high gives you the new thinking. So let's just say it went to not a D, but it went to a C. So then it would be E/C, because I'm keeping the new one and I've got the old one. And if it starts to break down, I just say, no, it's not a C, it's an E. All right, hope that helped you. I'll be back. Basil Chapman, Tiger Technicians Hour. We've still got to look at the dollar and a couple other things. And then we can get on with the business of where are we in the greater scheme of things. Basil Chapman, Tiger Technicians Hour. The Dow's up 5. We'll be right back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I forgot completely. I did have it up in the break before the show started, and then I completely forgot. Where are we in the 10-minute chart? The 10-minute chart did exactly that cup formation that we were talking about, that I was showing in the 30-minute chart, but it actually went a little higher after that cup was completed, and there was a, how can I put this? To the left side, right side price time match, I had drawn in a dashed Chapman Wave inside wedge target line, and I kept it going. And that target line wasn't hit. Very often when the price isn't hit, but it's hit later on, it can extend higher. And that's exactly what you see right here. And basically what happened is it went right to that line and went to 21.52. So the down arrow at peak D right there, double top at 6:20 this morning at 21.85, 21.48.75, pulled back to the 21.46-ish level, 21.46.75, and then ran up just as the market about 9 o'clock or 9:30, it ran up to 21.52.25, and then it pulled back. Now, there is a Chapman Wave H pattern, the dreaded H, remember? And that just simply says that if there is a break below 21.43.50, the low of 10 o'clock, and it holds under there for 2 out of 3 bars, and it doesn't close any one of those bars above 21.43.50, then there's a really good chance you could have a 1-to-1 over a period of maybe the rest of the day, I'm not sure, down to the 21.39 area. No big deal, 5 points from here, -6, I think a correction of maybe 40, 50 points in the Dow, and 6 points or so in the S&P, no big deal. If, in fact, it holds very well, it could make the H pattern and have another bounce to get to 21.47, 21.48, but real simply, another move into the 21.49.50 area would be positive, saying that there's enough buying and selling through the rest of the day that we're going to go sideways and close it with a narrow range rather than slightly down. Okay, make that quite clear, and let's move on. So crude oil, remember yesterday we were talking about it, and I said, well, the way I'm looking at it, crude oil could bounce. I see nothing here. I didn't really see it as a short at this particular point. But I did see that it could bounce to the 9-period moving average, even a tad higher, but it's going to keep coming, making lower lows and lower highs until that pattern changes. And that's exactly what we're looking at here. Now the weekly is suggesting that if they're at 45.22, if there is a break in crude oil below, and I'm anticipating some of the some of the questions, emails that I get, I always get questions about crude oil. So I'm saying that if crude oil closes between today and tomorrow, Thursday, this is before the Friday session, but closes Thursday, up until Thursday, below, and I'll tell you exactly the figure I'm looking at now, below 44.24, the low of the 10th of May, there's a really good chance that the lower lows and lower highs will continue into next week. And that's why I've said that the monthly chart is so important and had a really good move on a percentage basis based on where it went to. But historically, it is quite pathetic, having been in the 120 area in 2015, having been as low as 32 or 3 in 2016, bouncing from, I'll tell you right now, from 32 to 50 to 20 points. It's about a 60-something percent rally, outstanding percentage rally, horrible rally based on the monthly chart. Just look at this monthly chart. I mean, remember the 1-to-1 to the downside? Still in place. Could take a year, could take longer, but I think we're headed down to the 20s at some point. And I believe, based on my analysis on a socio-political economic level, I suspect that the oil-rich countries are having a very difficult time selling the oil. And I think that they have gone into huge projects that have to be paid for. And I think there are many changes that are going on, and those changes are going to affect the price of oil. That's my thinking. Doesn't say you couldn't have some really good balances, but I think lower lows and lower highs in the monthly chart is here to stay. All right. So now we're going to go to a couple of other things that I want you to look at. When we're looking at stocks that are with news, look, here is Alcoa. And Alcoa had a big spike up, good news about the earnings, well, better news about the earnings. And looking out is actually the part that I think is being foreseen right now. And Alcoa is at 10.65, up down 4 cents. In a leg C, probably a peak C today. Does that mean that when we get to a D, it's going to plunge like it always does when it gets to a D and an E? This time, we're going to see whether it's different or not. And this is what I'm thinking. Within the context of the patterns that repeat, the weekly chart is made you can call it a cup pattern, but I really should not have that. That was just the first, to get to the first. Let me put it this way right here. This will make it clear. This is what we were looking at before. Remember? And I had a price time match. Let me do this so you know what I'm talking about. And I'm doing this because Alcoa is telling me that something a lot better is going on in the economy that's been spoken about. And it's representative in certain areas like steel and aluminum. And in fact, you've just seen a little bit of a turn to the upside in Ford. And I think that's a good sign. I don't know where Ford's trading right now. We missed buying it, and now I have to wait. Yeah, it's just bumping up against that resistance. It's down 9 cents. But I suspect that because so many cars are selling, so maybe the automobile companies are having some difficulty in making money because of other expenses and whatever it is that goes into it with the currency wars and international, who knows how many cars are selling overseas and all that stuff. But they are selling cars in America, 17 million. That's a lot of cars. So GM, there's a news story out that says that one of the suppliers could be a real problem for GM because they are about to go broke. Because you know what happens with car companies? They squeeze and squeeze and squeeze. They'll say, okay, 50 cents for 1,000, whatever it is. Oh, and by the way, next year it's going to be 42 cents. Oh, and by the way, the following year it's going to be 33 cents. They don't care how you make your money. And the company at first thought, fantastic, we've got GM as one of our big clients. Yeah, a big client, but not a big profit. And that gets squeezed and squeezed until the company, as always with General Motors, I have to tell you that the head, Barrow, whatever her name is, she was there before when GM was just doing all the wrong things, lawsuits, not checking safety requirements, all that sort of thing. I don't know. We'll see what happens. So, but Ford, I think, is doing a lot more things correctly. So I think Ford is actually the better looking company, but it's still not great. It's still really struggling. I mean, it should be a way up, not a 13, it should be a 23 based on sales figures, surely. All right, well, enough with that. What I wanted to say is that Alcoa is acting well, and I think it's telling us that something's going on. Let's look at Boeing, maybe. That's the relationship. Boeing is pulling back. It's down $1.10, 129.71. That's not telling us a thing. It looks like the Ford chart. Wow. All I can say is it's getting very complicated if you want to do fundamental work here. Fortunately, we're under the radar. We've got a number of stocks that are doing very well. And that's the way I think you have to look at this market, that you can go for the indexes, that's fine. But if you're looking for individual stocks, be very selective.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. TFNN, we get responses from people all around the world. There's a great one here. We're being told that it's all about the new earnings season, which is supposed to be a vast improvement over the previous quarter. And indeed, Alcoa, AA, New York Stock Exchange, reported that in typical media fashion, it was covered as a huge 67% upside surprise on robust demand from China. However, if you dig into AA's, Alcoa's actual numbers, you'll find that quarterly revenue is down, minus 15% year over year. Quarterly earnings fell a truly awful minus 91.80%, and earnings per share came in at minus 0.45. Does that mean shareholders have to pay Alcoa? Good one, good one. And then adds David White, this person listens to our shows all the time. Thank you very much for being a TFNN listener and for sending this. David White said that cars only have a 6% margin. They have a 6% margin, but when you think about what it costs them to put that little rear view, the camera at the back, what is it? Maybe the entire thing was costing $1.50, and they charge hundreds and hundreds of dollars. The computer that they have in the car costs them that number of computers. What does it cost? $25, $35. All I can say is $100. And they charge thousands for the extra with the screen and everything. So they're making their money just, remember the airlines I spoke about a long time ago? I said, here's your template going forward for all industry, is to go a la carte, to get people to pay for every single thing. Go to your Verizon or AT&T store and get a new phone, which I did just recently, reluctantly. Everything, geez, it's kind of pathetic. And there's no choice. You can have a choice, but it leaves you with no choice, really. So, yeah, thank you very much for that. Yeah, I do. I looked at Alcoa, and out of the aluminums and the steels, I thought that Alcoa was the one with the greatest mystery behind it. That doesn't mean to say that it couldn't rally, because it's also perception, as far as I'm concerned. Look, if you look at this chart of the daily, and then you looked at the weekly chart, there's no way you could read it the same way as the facts were presented right there. So it looks like it's trying to form a base, and maybe it's looking ahead, maybe it's not, but it is acting quite well. So that was my point. Now, something else I wanted to talk about. Good question is the question. GT asks, S&P 2237, can this level be achieved? 5% breakout post S&P 2131 old closing high. I have stats that if the S&P breaks out plus 5% or more over old closing high, market will stay up for at least 6 months and revert to buy the dips mode. So I have a different way of looking at this. So I'm going to do right now. Let me do that, because I had so many questions about this. And I do think many people, people have been listening for years, and there are a lot of people that have been saying you showed that stork leg formation. You had your webinars, all webinars over the last year, and a little bit, year and a quarter, have been looking towards higher highs and all-time highs in the Dow. But I have to do this. I have to say to you, within the context of markets, let me go to the S&P just for a moment. The pattern that I'm looking at here is that the breakdown, can I do this? Yeah. How am I going to do this? Okay, I want to make it as simple as possible. This is what I'm going to do. I'm going to do, you remember I did this back in 2009, I think it was, 2008. 2007 or 8, I started doing this, and I made this 9-period exponential moving average right here. I said, okay, I'm going to try to change my charts and go to white background, because so many people said they couldn't see the patterns very clearly. And then I said, you know what I'm going to also do? I'm going to do this. I'm going to make the 9-period exponential moving average thick. It kind of interferes with some of my looking at peaks and troughs, but it's just so clear. Look at this line. The little snake that you look at, that black line in the monthly S&P. Look, from the moment the S&P broke and closed above that 9-period exponential moving average in 2003 and went to 924 from the 847 low, the real low was 768 back in October of 2002. Remember, the S&P made its low in October, and the retest, that dreaded H retest, in 2003. The Dow made its low in 2003. there was a difference. I think the semiconductors also was with the S&P. So here we are, that black line. From that moment on, the S&P only closed under that black line after it had gone to the October 2007 high of 1576. Lost sound. I don't know if that's me. So, oops, let me just see if everything's working here. I don't think everybody's losing sound. I'll have to ask my engineer. Losing sound? I'll just put sound. Sometimes that happens. Okay. Within this context, what we're looking at is the S&P closed, well, there was a little nick of it right there, April of 2005. But, in fact, what happened? Let me just review this quickly to see if the sound is back. Sound back? Just give me a YONN. Great. Okay. The low that was made in the S&P back in 2007 in July, and then retested. Oh, let me just get this right. This is the low in October of 2002. From the moment it had that successful H pattern and had a rally that went above the 9-period exponential moving average back in April of 2003 at 924. Only once was there a little nick to the bottom of that 9-period moving average. Otherwise, it did not close below that 9-period moving average until the Chapman wave Roman candle right there. It says Chapman wave Roman candle after the high of October at 1576. Right there, January of 2008. And remember, I had to wait until December of 2007 to get the sell mode in the Dow and the S&P. How about this? It breaks down and it closes above. Remember, we picked the exact low in 2009, the day of the low, March 6th with the Dow Diamonds. We bought it and at 666, and we held it for about 18 months. And then it was July of 2009 where the S&P went above, the monthly chart went above the 9-period moving average. Here it's a little different. There were two closes underneath the 9-period moving average. Then it went to the high, peak D at 1422, and that was the high of May of 2011. Remember, that's the only real big correction we had up until fairly recently. And then it pulled back to the October 2011 low of 1077. Now it breaks above the 9-period moving average in November, and it does not close below that except for that ugly Chapman wave Roman candle right there in August of 2015. And if you remember, you made the high back in July. Was it July? I believe it was a little different to the Dow. It was July of 2015. No, it had to be May. May? May. 234, 230, 232. Yeah, sorry, it was May of 2015. And now we're above the 9-period exponential moving average. Within 2 bars of breaking below it, the last time, we're back above it. To me, that is really positive action. Short term, I think we're going to pull back. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Let me just get back to the E-mini, the 10 minutes that I was talking about before. Remember, I did this measured move. There it is, right there. That was the A to B, and then I don't go. I don't have a fixed way of going C to D. I have a couple of ways of doing it, and invariably I go to the arch formation peak, or I look at the 9-period moving average, or I look at one of the moving average or some technique. Well, I have very, very little here. So the only thing I could do is go to the highs that were made at 21.48. And I made a measured move. Remember, this is it right there. I did this measured move right there. So it was an A to B equals C to D. This is your lightning rod that many people here, hosts at TFNN use. And I did a one-to-one expansion that took you down to 21.3950s, and the low so far this morning is 21.40.50. All right, a point away, could still get there, and I just go step by step. The next one would be the move in the cup formation where we broke to the top. So I have other ways of doing the technique to the downside. In the meantime, I had a couple of questions. So AAL, yeah, I did, Bob, I did AAL in the end. But you're right. I made a mistake. I couldn't believe it that I said we're going to AA, and I thought AA. It was AAL is American Airlines. And if you remember, I did do it, and I said that it broke out, and it looked to me like the IYT, that the transportation index was actually participating now for the first time, but it had all this resistance to break above, and it's still trying to break above this very long-term downtrend, Chapman wave inside track. And that resistance level is what has to be taken out. And what I said is I want to see the IYT up in the 142, 143 area. If I didn't say it yesterday, I said it the other day, but those are the numbers I remember quite clearly. And now what we're looking at is within the context, and I have to apologize to my subscribers. I made that remember yesterday I said that I had a plan for subscribers that if the Dow went 1 point above the all-time high, we had a plan in place. I had the plan in place, and it was working. I messed up this morning. I can't believe that I forgot to go back to review that line, and I said let's make the stop, and the stop was the entry price. So we didn't lose a penny on the trade, but I meant to keep it because I think we're going to be going down, and this particular instrument will be reflective of that going down by rallying. So if you didn't get out because we got hit by 1 penny, if you're still in the trade, stay in the trade. It was just, I apologize. I was so sure that I was going through every line to be careful, and I knew what I wanted to do. I made a mistake. So make the stop what you entered at, or maybe a penny or two lower, but keep it, because I think we will be going down a little bit at least. So let's do it. So that's AAL. And the question also was CSX. You know, I meant to look at CSX yesterday during the day, because I knew that the earnings were going to be coming out, I think, after the bell today. And I looked at it and I said, oh, I'm not prepared to put up anything when you could go up or you could go down. Everything about this chart says it's going to try to tackle the 2730 CSX Corporation railroads, the 200 period exponential moving average of 2730. It's going to do it, and if it isn't now, it's going to do it the next few days. But it was such a silly risk to take, and it is down today 25 cents at 26.77. But my thinking was that if there was an option, I was going to say to buy the call up. My leaning was towards the call option, even though the monthly chart still looks terrible. My thinking was that there would be some kind of a surprise, because oil's come back. I don't know what grains have been moving. Things have been moving, that's all. And I thought it could be reflected in the price a little bit. So the question here is, what is the question? Please show, yeah. So the question, now let me do in a much larger scale. Here we go. You see this sideways pattern? I always recommend in the sideways pattern, just trade the top of the range and the bottom of the range and do the inverse, and at some point you're going to be wrong, and let the market tell you. And all I can say is that if this, in fact, is leg B to the upside, the next move, if it goes above that peak F high of 27.41, could be the point that it finally breaks out. But if I put in a rectangle formation right here, you'll see that for months, if you bought in the 24s and 25s and you exited in the 27s, you didn't have to go short. But even if you did go short, it pulled right back and it went right back again. And it did. Oh, that's right. That was an overlapping wave. Remember in the den, someone was, I think it was peaking in the den, was looking at, and he misnamed it. Yeah, so that E, once it breaks above, because you didn't go below the starting point of the buy signal on the 24th of Feb, when that pullback occurred and was higher, that keeps that left side E active, even though there's a down arrow, and even though you fulfilled all requirements of a sell signal to sell mode, it's turned up and it broke above that peak E. And that says that this is a parallel count to 62.63. So that would have been an F/B. Once it broke down, it became an F. And then you had a full A, B, C, D, E, F, pulls back. And that's why I'm saying if it breaks above, you have to consider that's probably a new buy mode and that it's actually going to be going up. But the theory so far is that going towards 28 is where you could see it, you could get rid of it, and you could buy it back 4 points lower, 3.5 points lower. Hope that helps you. So Dana in the den wants to know, Basil, before you close out the show, can you give us a perspective on the VIX as we close the day? Let me do it now, because I've got a feeling there are a couple of things that I want to talk about, and I'm liable either to forget or run out of time and talk over the break, which my engineer Al just hates for me to do. And this is the A pattern. Remember, we put it right in there. It's the Eiffel Tower, straight up, straight down. The Brexit high of 26.72 at peak F in the VIX index daily had the sell-off really sharp. That was just a perfect time to short. If anyone shorted the VIX, for congratulations, because it got cut in half. It went down to 12 something. It's at 13.53 right now. And it says to me just within this range now, you've got a little bit of a consolidation, and it could even have a bounce just for a couple of days where the VIX index goes towards from 1354 towards the 1450, 1551 level, no, 1525 level, just a 2-day pullback, and that 9-period moving average at 14.74, that's going to be key. So as I'm looking at it, I'll just tell you that on the day, if the VIX index, because I think we're making lower lows and lower highs, I am so upset. Oh, we would have such a nice percentage gain if I just kept the plan from yesterday. I can't even remember why I changed it. All right. Berating myself, I'm sorry, but it was because my subscribers have missed a really nice opportunity for a big percentage gain, even though it's a small position. All right. Make it easy. The VIX is at 13.54. If the Dow at minus 30, what I'd say to subscribers in my opening call, let me just get it real quickly before we go to a break. Right there. Oh, there goes that buzzer. Completely forgot about it. Out of mind, out of sight. And I'll put it off right there. All right. What I'd said here in my overview, every day you get my Dow charts, you get my overview, you get all these things here. I'm looking at this VIX index is probably seeing the Dow move down a little bit as the circle is contained with the 120-minute Dow, 120-minute volatility index coming together a little bit. Later on, I think next week they actually come together much more. So this is the details. And what I said is Dow minus 30s, S&P minus 5s, Comp Index minus 8s at any point, and that could start a 1 to 2 day timeout before running to new highs. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Was in fact I believe we
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.